Begin stage 2.
They're already starting to panic.
Of course they are. They think that someone's taking their money. All those nickels and dimes they saved had meaning. Useful idiots, as Lenin would say. Prep the video package.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. I hope everybody's having a fantastic weekend. It has been hot here in Florida. We hit 97 degrees in my area yesterday, 36 degrees Celsius, super scorching hot with no rain in sight. It's been crazy. But guys, the markets, the video I made last week, summer top incoming. We've talked about this previously, but understand you're trading in the most concentrated rally in the stock market since 1997, with the top 5 companies accounting for 82% of the gains. They will give way. The average retracement the last 5 years in a row during the summer for the S&P, talking about June, July, and August, is 10.5%. Major pull down. We had triple witching on Friday, which was 5.5 trillion in options expirations. So this is going to be a key week because we had a nice sell-off. NVDA had a nice sell-off. It hit above 140, dropped into the 120s. Now we're looking for that reflexive rebound and see if the resistance holds. And we're going to go over those levels in the chart. We're going to cover NVIDIA, got Tesla, got Bitcoin in the cryptos. And of course, we have the markets. Guys, if you want to trade these markets, check out Bitunix for all the cryptos. No VPN, no KYC, link in the video description, as well as SimpleFX to trade equities, commodities, Forex, Bitcoin, everything you want to trade. Most of the world can trade there. Our special VIP bonus is available there in the video description. And guys, I would love to see you in the Discord, in our community, talking to you, talking to our staff. And you can look at the video description for the link to our Discord. Message Lee in the Telegram there with any questions about joining. Be sure to like and subscribe if you enjoy this content. Let's start the show, Lee. All right, guys, I put together a really cool chart for you. I want to show you this. This is the 10-year minus 3-month. This is a yield curve inversion. You hear a lot of people on YouTube still talk about the yield curve inversion, right? Couple of things you should know. The 10-year 3-month is the yield curve inversion indicator, as discovered by Cam Harvey. He wrote about it in the 1980s. This was his discovery. Now, most people are using this to predict the recession timing, and you're just doing that based on an average of how long the yield curve inverted, when the recession would start. But the economy is like the Titanic, and once you see the iceberg of the recession, it's too late. You hit it, and then you go down, right? We already know this from our GFC experiment with the Fed, that the Fed didn't declare the recession till a year after the recession started, which is the National Economic Board of Research, NERB or NEB or whatever they call themselves. But we know this, that they're going to be late. But what I wanted to do in this thought experiment was look at the 10-year 3-month inversion. Be aware that this is the strongest and longest inversion in stock market history. I want to show you some comparisons and show you what I'm looking at to see if I could find any market symmetry. Right now, we are minus 1.24. We've been as low as minus 1.82, maybe slightly lower. If you look at the GFC, our bottom here was minus 0.59. This is the actual inversion, okay? Now look at some of these notable declines. The pandemic, we had the inversion. Obviously, trillions in global stimulus was put in, but you still had the S&P fall 38%, and oil went negative, okay? Negative. Now, when you look at the GFC, notable decliners, the S&P fell 57%, gold 34%, silver minus 61%. But what I did here was I wanted to denote the actual time of the inversion when it inverted and stayed below, and see if there's any symmetry in the marketplace for when you bottomed in the market. Okay, so in other words, we inverted back in July 2006, but the market did not bottom until March 2009, March 9th, specifically 2009, as this is a weekly chart. The actual day of the bottom was March 9th, 2009. The master number in the marketplace, as Gann would tell you, is 9. Very interesting, right? This took about 138 weekly bars, 966 days from the time of the inversion to the time that the market bottomed. And you can see how this played out. I'll overlay the S&P so you can see this. We had our inversion. We broke out of the inversion. As we uninverted, the markets went down. Okay. So looking at this in that lens, let's look at the Y2K bubble, right? Let's look at the Y2K bubble. So we inverted July of 2000. As you can see here, we inverted July of 2000. It took 118 bars, 826 days for the market to bottom, okay? Way up here. So we inverted over here, and 118 weekly bars later, the market bottomed. And that actual bottom date, by the way, was October 9th. This is a weekly chart, right? So October 9th, 2002, we bottomed in the marketplace and the Y2K bubble and the GFC. March 9th, 2009, we bottomed in the marketplace. What's also interesting, long-term subs will understand this. Shmita Eclipse, I know you get this. When was that bottom in the Y2K bubble? Shortly after, a week, a little bit less than 2 weeks after the fall equinox, cardinal point in the market. When was the bottom in the GFC? Just before the spring equinox by a week or 2 weeks. These are key cardinal points in the market where you get market peaks, like in March of 2000 for the dot-com bubble, and you get market bottoms. So you need to watch this because this has been the history of the market going back 25 years now. Key bottoms, key tops at those two cardinal points in the marketplace. So what I wanted to do here is show you how this could play out for where we are now. Now, there wasn't anything between 118 bars, 138 bars. Obviously, these played out slightly differently. We know that the GFC was the longest inversion in recent history, and now we've surpassed it with our inversion, with a deeper inversion. But I'm looking at this through a harmonic cycle of 144 bars, which would take you to just over 1,000 days. Now, that actual bottom in the market then, right? The bottom in the market would be July 28th, 2025. Now, this is a weekly bar count. When you take this to the daily, that actual bottom, which would be a Sunday, right? The market's not going to be trading on a Sunday except for futures. That would be Sunday, would be July 27th, 2025. What's interesting about 27th, you had your bottom in the market on the 9th. You had your bottom in the market on the 9th. You had your two previous bubbles. Obviously, this would be the third bubble. So here I'm stretching a little bit, but I found this really intellectually entertaining. What's 9 times 3? 9 times 3 is 27. July 27th could be your next market bottom, 2025, for the bottom in the marketplace, right? But when I was looking at this from a geometric mean perspective, meaning I took 118 bars and I took 138 bars, the geometric mean was 127 bars, okay? 127 bars for these two averages here, or for the average of those two numbers. And when we look at that, when does that actually take you out to? 127 bars, 889 days. That takes you out to March 31st, 2025. Again, spring equinox. That's really interesting to pay attention to, really interesting to watch. Something else I want to show you, something you hear on Bloomberg, on CNBC, especially that one character, Dan Ives, I think, the guy that dresses in all those funky suits that covers tech all the time. What do you hear the perma bulls say in the marketplace? This market is like the mid 90s, 94, 95. This is when everybody points to a soft landing, right? 94, 95, we had a rate hiking cycle, but the Fed then cut rates and the markets recovered, and then we blew up into the dot-com bubble. Yeah, the mid 90s, you didn't have a yield curve inversion. You never inverted in the yield curve. Totally different story. Again, 100% of the time, 3-month 10-year has its yield curve inversion, and there's levels for this, but you're at the deepest and longest in history. But once you cross these levels for the yield curve inversion, 100% of the time, you get a recession. And this is part of the late market cycle. Now, what I want to do here as well is let's lay over the S&P. I hope everybody's following along with me. Let's lay over the S&P, because .com played out differently than the GFC as far as the inversion and the market movements, right? Because you hear people say what? When the yield curve uninverts, that's when shit hits the fan. Well, that was true in one case, but not in the other. The other case, let's start off with .com. So let's look at, here's the S&P in gold, okay? Here's the S&P in gold. So you had your peak cycle here in yields in January of 2000, roughly on a weekly chart. The market peaked just after that, right? We know the market peaked in March of 2000 as yields started to decline. The yield curve inverted in July. The market was still very close to its all-time highs down here. You see that? The market was still very close to its all-time highs. As a matter of fact, the yield curve inverted, put in its W pattern, broke back out to the upside. Do you see this? So here's your uninversion, uninverted, and what did the market continue to do? It continued to decline. But the difference here is the market was declining as it followed yields down, right? The market was selling off prior to the inversion, as you can see here in the chart. It certainly sped up once it did invert, and then it uninverted. The market continued down in the downward trajectory. Obviously, you have rallies and sell-offs in between. But what happened in the GFC? The GFC, the cycle we are repeating now, I believe, is a blend of the two, because the GFC is what you're seeing play out right now in the marketplace. So when you look at the inversion, right, the inversion of July of 2006, here's the S&P. The S&P rallied. Look at this. The S&P rallied, pulled back, made an all-time high, pulled back, made a new all-time high, pulled back. And this is all as the curve inverted and uninverted, right? So the curve uninverted. You did not start selling off profusely here until you were well into the uninversion, almost spot 87 above the zero line, okay? So again, this is just played out slightly differently, but the key point here is you had one market follow yields down, and you had the other market rally. The GFC rallied as yields fell and inverted, and that's what we're doing right now, because when you bring this to the current marketplace, let's go ahead and go over here and look. When you bring this to the current marketplace, look what the yields did, right? So you can see the S&P here in gold. Let me pull this down a little bit so you can see this. You can see the S&P in gold. We had yields peak, right? Yields peaked, whatever that month is there, May 2022. The market was selling off. The market came down to its bottom. Yields inverted, as you can see, in October of 2022. Yields stayed inverted, ups and downs, but you're coiling here, right? Yields stayed inverted. What is the market doing? The market is rallying, okay? The market's rallying while you have the inverted yield curve. So again, it's a blend of the GFC, a blend of Y2K. But what I'm interested in, we know once we uninvert in both instances, it's a question of what level you have to get to in the uninversion. But overall, once you uninvert in the yield curve, the markets will be selling. Okay. In the GFC, it took longer with the uninversion. You came up to the uninversion. You almost had to get positive by almost 1% before the market really broke down and expedited the decline. In Y2K, you sold off the whole time once you got inverted in the yield curve. And when you uninvert it, you had an expedited move down as well. So we know the uninversion will cause selling in the market. We're not anywhere near clear in uninversion right now of the yield curve. And we also know, just in general, market psychology, retail investors, they think, because this is what they're told over and over again on TV, if yields go down, it's bullish for the stock market. And we know this is a parabolic market bubble. Remember, we are trading in the third most expensive stock market in stock market history. Right now, the PE is 35.58. We got all the way up in .com to 44.19. This is 1929 over here. Okay, so this is the third most expensive stock market in U.S. history. I think we're going to take out the 2021 high, 37.97. I think we're going to take their 38.58. I think we're going to take that out, but I think we're going to get that pullback before we take it out. And I think we're going to challenge the .com highs because of the extreme concentration we have in stocks. So again, I think this chart's just something to track, something to pay attention to, just looking at cycles, looking at ways it can play out, but understanding how this potentially could play out with the yield curve and what to look for is important, I believe, in the larger macro picture. We have the election this year. We have $1 trillion in new debt being printed every 90 days. Our debt payment just surpassed our military defense budget payment here in this country. It's unsustainable, but the market with all that liquidity, look at it. Look at that parabolic line. We're going to look at these here on the charts as well. Now, we need to start off on the big kahuna NVIDIA, because this has been a rather parabolic run in NVIDIA as well. Now, a couple of things we can do here. People ask me all the time about fib levels. I've been using volatility levels to track this as well. But when we look at this through a Wyckoff perspective, we're on an 8-hour time frame, so you guys can see this, right? What is Wyckoff? Wyckoff is essentially it's the market cycle, but most people refer to Wyckoff, including myself, when you're going sideways, which the market traditionally does in a normal market 80% of the time. You're going sideways. There's steps you have to complete, like a breakout to the upside, a pullback, and break back out to the upside with a potential along. Same way to the downside. You break down, you pull back, and you break back down to the downside with the potential to short. That's the way Jesse Livermore, Wyckoff's friend, the first billionaire, traded with part of his system, okay? But when we're looking at this, you had this parabolic run based off the earnings here. See the earnings pop, the big E down here? You had the run. You didn't get the pullback, but you did get the pullback. It's just higher up, right? It's almost like a Bitcoin pullback when the asset goes parabolic, pulls back, and then takes off. This is important from a Fibonacci perspective because what does Fibonacci do? Fibonacci measures expansion and contraction ratios. We can take this candle, pull it back down to this corrective low, and look what you hit almost to the penny. The 1618, the golden ratio, 140.65. NVIDIA got to 140.76, right? Within 20 cents. That was your top at the 1618. You sold back off. You held the 1272 at 126.75 as support. So for those of you tracking NVIDIA, the way that I'm looking at this is a three-wave move. You have to see what this next move is. Your next move, should you hold support, should be back to the upside to resistance. And if you can stay below your all-time high, if you so wish to venture and trade on that freight train of danger and death, which is NVIDIA, I am not looking at shorting NVIDIA, but if you were going to trade this, people are asking me where the resistance levels are. I would be looking at 137 at the 786, 134 at 134.47. So again, I'd be looking for this move. This is a very parabolic stock. You want to be very careful with this stock, but you want this area to form resistance. And then in confluence with the market, you want to see NVIDIA roll over. If you take out your all-time high, then I would be doing nothing with this stock. And you want to see what the next level could be and pull some targets on that as well, because your next stop would be 145 and 150 to the upside on NVIDIA. Now, if we go ahead and move over to the DXY. The DXY, I went ahead and laid over the S&P here as well so you could see this, okay? So we look at the S&P here, and when we're looking at this on the DXY, just understand the relationship with the DXY. DXY peaks, S&P is in decline as the DXY climbs up, right? The DXY is the candles, the S&P is in gold, and you can see the same thing happening again. Now, the reason I put this chart on here because it's really interesting to me how psychology in the marketplace works. So when you can see over here, right, here's the DXY. We've been talking about this in the Discord and on the channel, but once you're above that 105, 106, 107 level, right in this square where we made a double top and broke down, look where the market was. Right? Look where the market was. The market was at 4,100. The S&P was at 4,100, and we are right back in this range, about to cross into the 106 level and a bullish DXY. You have your higher low structure all through here. And if you do this move and take out this fractal, you'll be back into the 106, 107 range. And the S&P was 1,400 points lower. Again, something to pay attention to because I believe this summer top is forming in the marketplace. If we go ahead and look at the the ES, look at the parabolic run of the ES. The way that I think ultimately this is going to play out, as we've been discussing on the channel at length now, is I view this as a wave one. I view this as a wave two. And I think we're going to get this larger retracement back down and then have our wave three blow off top, 3 waves to a top pattern. Now, could this also, because many people believe this is a topping pattern that's going to break down, maybe a 5-wave pattern, like a head and shoulders, left shoulder, head, right shoulder. This is also a possibility, but like I tell people, I don't care because I'm looking for a short, right? I'm looking for a short. So if it does break down, makes a 5-wave pattern and starts breaking down below this neckline, unemployment claims keep going up. Maybe we get a black swan, who knows? And everything just starts falling apart. Doesn't matter, even better, because I'm planning on trading this. Now, when we talk about planning on trading this, where are my targets going to be? I'm going to be posting this on the Discord when I find my trade setup that I like. Got to see the markets open, but I'm looking at this a couple of different ways, right? I've showed you my broader and longer targets here that we had on the S&P. We know, for instance, when we had this first corrective move, right? We had this corrective move, which we traded. Again, if you've been watching this channel, you got this information on this channel. Big drawdown in the marketplace, right? What was this move here in the marketplace? 11% drawdown, 512 points. We traded this move in the marketplace, 370 points, 7% drawdown. How did we get that second target? Again, if you're not watching these videos, you're not going to get this information. We pulled down the fib and we hit the 1618 2AT at 53.34 and got this retracement, right? So these are the 2 big trades on that up leg for the shorts that I've had on this move down. And what we want to look at now is, where is this next target presenting itself with any type of confluence or higher chance of probability of playing out? Again, what I'm looking at here is our W that we've covered over and over again. Let's go ahead and do this on the daily. This is a 3-day chart. I want to put this thing on the daily. If we look at this on the daily, there's your W. You can see it. Showed you guys this many times before. If we pull the fib from the top of the W down to that corrective low, look at your target that you hit at the golden ratio, 1618, 5,562. This area is your resistance, 5,562. You got all the way up to 5,588. You sold back off. Not a strong sell-off at all. You're at 55.34 at the moment. Could price just simply do this move and then break this fractal and continue up? Yes, it could, right? That's why I'm not in a trade at the moment. I want to see what happens here over the next couple of days. I think this week's going to be key with having the triple witching, the options expiration expire. Again, $5.5 trillion on Friday. You're going to see some stuff with positioning. Maybe we can get some market euphoria Monday, Tuesday, drive the price back up. But this is a level you want to watch. 5,562 on a smaller time frame. Look for patterns. If we go ahead and look at this on a 4-hour time frame, you can start to see things present differently. It's going to be a key level, a key area to watch. You want to see what price does. You'll have a hint today when futures open, but you want to see if you get this type of move. And if you do you fail back at that resistance level? And I also want to pull a fib from the all-time high, pull it down to that low here on that leg, and then look at 5,573, the 786, the 618 lines up right with the 1618, 5,562 to the dollar. Look at that. Again, key resistance level to watch for those of you that are wishing to trade and look at resistance and support levels. Something else I want to show you that's interesting. Looking on the daily chart, and people laugh about this. I understand that, but I don't really care. If we look at the daily chart, what about our full moon? Did we have any key esoteric events last week? We were talking about this on the Discord. We had the summer solstice, the longest day in the year. These are ordinal points in the market. Your cardinal points are your equinox dates. Your solstice is an ordinal point in the market. Not as important, but still important. But also, we had a full moon. So let's go ahead and look at this on the TradingView moon indicator. Put on your tinfoil. But the TradingView moon indicator, how successful has that been? I'm going to go ahead and focus on the last 3 full moons, right? So we had the strawberry moon form on, what was it, Friday? So we should see the little moon here come Monday. But look at your moons. Look at your full moons. Now, again, confluence. Do you have a strong uptrend in place? Are you hitting Fibonacci resistance? Full moon, top, right? Full moon, top. Full moon, top. And we had a full moon once again up here. Let's see if we start forming our top to the downside yet once again. Let's check out some other indicators that maybe more people utilize, but I want to go ahead and look at this as well. Open this up. MFI, we got oversold. There's no real such thing as oversold or overbought, just a term you use for the oscillators. But you had a little bit of a sell-off. Momentum is key here because on the PPO, you're looking like you're flattening out. Momentum's rolling over. So again, I would like to see a spike up tomorrow, tonight, and futures tomorrow, but I want to see what the failure point is. And actually, the next level I'll be looking at, just give you guys a little cheat code here with Fibonacci, is a square of 3, right? I'll be looking at root 3 here for the next level. This is a square root of 3, 1.732, 5604. So will price stay, do something in case you get a higher double top on the second top, something like this. So I want to watch these levels, 5604, and we're of course 5562. Let's go ahead and move forward to the NQ. Same exact concept, guys. Pulled fibs the same way. There's your larger W pattern. Pulled the fib from here to your corrective low. Look at the 200% expansion, 20,304. Of course, you hit it. You did not close above it. You sold back off, but you're sitting at 20,000 on the NASDAQ right now, the NQ. So again, want to see the same thing. Want to see this move. Want to see if this move holds at resistance, 20,304, if you start to roll over or if you take it out for a potential new all-time high once again. And that's all going to be about patience. So if we look at this, let's go ahead and look at this on an 8-hour, get a couple more candles. If we look at this on an 8-hour, take our fib from the all-time high, pull it down to that corrective low as it stands right now. You want to look at my 618 up at 20,196 and the 786 up at 20,273. And obviously the key resistance point is that 20,304 here. Going back to the daily chart, did not get a daily candle close above it, right? So that range, just up in that range, you want to watch this where all the candle bodies started failing here, 20,002 level to 20,200 to 20,300. Watching that level, see if you get a pop up, see if that pop up and that resistance hold, okay? So look at the indicators. Our PPO is about to roll over as well. Again, you had a double top play out here in the MFI already. Move up, move down, move up. See if this starts to roll over. Momentum was really, really strong. So this is what we're watching, guys. This is a key week coming up for potential trades in the marketplace. What about the Russell? The Russell fell back below the 50. And again, if you see the S&P and the NASDAQ put in new all-time highs, then you could see the Russell put in this W pattern and try to come up to a higher level, right? What level would I be watching at? Obviously, the 618 from the all-time high at 20,000 or 2,152. If I pull this fib down, I'm going to watch 2,079 and 2,100. Right in that level is what I want to see. Because again, the Russell to me looks like it's putting in its 5-wave pattern, its head and shoulders pattern, left shoulder, head, right shoulder, right? And if you start dissecting these patterns, you could simply have a lower high double top here as well. So you want to watch this, see if the markets do respond, stretch the rubber band, shoot back up a little bit. But the key thing will be, will the resistances hold? If we look at Bitcoin, again, key market 3-wave pattern, right? First all-time high in this cycle back in April of 21. Second all-time high back in November of 21. The Russell making its all-time high within 72 hours of Bitcoin. Then the massive sell-off, right? 55% decline in between. I want to show you that 55% decline because I saw in the comments a lot of people are upset about these lower level targets here, 52 and basically 45K. But that's nothing, right? This is actually a bullish situation for Bitcoin, in my opinion. You come down to the 52, it's a 29% decline. Big whoop. It's Bitcoin, guys. It moves really quickly. You come down to that 45, 44 level, it's less than a 40% decline. This, to me, would be healthy. And this will happen if the markets have a steep retracement. Remember, if we're talking about a 10%, potentially a 10%, 10.5% decline in the S&P, the NASDAQ should be a couple points deeper. And Bitcoin typically moves at a 3 beta to the NASDAQ. So you're looking at a 33, 35, 38% decline in Bitcoin regardless. So somewhere in these targets is what I would want to see hit. But if it doesn't do that, right? If it doesn't do that, this to me is more bearish is if we do this. We pull down, we pulled up, we made our W, we hold this support level and come back up, because then I think your upside is really capped. This isn't a stark enough, deep enough retracement, because you made these all-time highs when the market once again has this deeply bifurcated market with only 5 stocks accounting for 82% of the gains. Bitcoin's a different asset, but it shares the same liquidity pool. Lee's $100 is going into a stock or it's going into crypto. He doesn't have the ability to duplicate that money and put $100 in everything, okay? But this, to me, in my opinion, if you do this move, is more bearish. Yes, it's bullish short term. You're making a new all-time high, but this could give you a catalyst. If you just come up, and we're going to look at these levels on the next chart, but if you just come up into those mid 80 levels, right, at the 1618, then I think, if the economy starts speeding up the decline, if you have a deep decline in the markets, you could really see Bitcoin pull down. But this is an interesting area in Bitcoin right now. We're looking at this on the daily chart now, pulling a fib from that corrective low up to that recent high there. You can see we dip below the 50% level. The 618's at 62,461. So we're going to watch these levels because, again, that W pattern is present, right? It's a key pattern, guys. You make these patterns all the time. Here's your W here, right? You made that W, you sold off, whatever that was, 30%, 20% decline. Let me look at that actually from what that pattern was, because I don't remember. I do not remember. That was a 22% decline. But this pattern is something you want to watch because, again, the key levels to watch here, 64,296, which you're below, 62,461, if you can hold this. If you can hold this and the markets, for whatever reason, continue to rally, then you want to see Bitcoin bounce and move back up, right? That's what you want to see on Bitcoin. Now, the key levels that you have to watch on Bitcoin for that upside bounce has been the same. I say them every single video, is 71,850, where you keep failing, right? You keep failing at that 71,850. That's going to be your key resistance level. But what I think could happen, let me flip back and forth on my charts here, is if you were to hold this and you were to break out majorly to the upside, you take out 71,850, you start moving up. Let's go ahead and shrink this down and look at this a little bit. I'm just going to do this from this juncture here. Let's just do a wave pattern so you guys can see this. So, let's just take the wave from here, right? This pullback here. This is just for illustration purposes. This is not Elliott wave theory, guys, but 5-wave and 3-wave cycles are key patterns in the marketplace. You'd be looking at something like this for your W, right? So here's your, you come down to 618, a little bit deeper, whatever. If this thing comes up and we come up to our next level, I'll show you this with Fibonacci, but we come up to right around here, 84, 85K, something like this. I don't think this is a bullish move for Bitcoin when confluence with the markets are so overstretched, right? Because I don't think it's going to continue from there. I think it's just going to decline even deeper then. So that's what I want to watch. And we can see this measuring this point from wave 1 down to wave 2. Look at the 1618, 84,550, okay? This could be the move if Bitcoin does get more bullish and holds that support in this region that we're talking about, that 60 to 64K level. If it can hold that region, 62 to 64, and you get that bounce and you take out 71,850, but again, I think when the markets are this stretched out, unless they just continue to grind next week, then we'll be making a different video, right? But if they continue to grind, it doesn't change the underlying fact that it's 5 companies and that eventually it will stop. It will top, it will drop. That's just the way that it works. You can make an argument 5 companies can carry you for 5 years. Sure, show it to me. Show me when that happened. It doesn't happen. So overall, you're going to see people take profits. And this is why it's important to look at where you're finding resistance. I don't like this pattern. I like the pattern of Bitcoin pulling down, because if Bitcoin pulls down, going back to our larger 3-day chart here, we know that if Bitcoin pulls down to these levels, 52 or 44, we know that when we examine this with a Fibonacci analysis, right? Showed you guys this many times, but from the top of our diamond pattern, right? Type of our diamond pattern down to the market low of 15.5. We come down to this low. We know that we got to the 200% expansion perfectly for the next accumulation zone to form right here, okay? 200% expansion. And we know that if we move in a pattern of expansionary ratios, this can be really key for forecasting and for tracking. We can go to the top of that second expansion zone, pull it down to the diamond pattern low, because now you're looking at this as legs, right? Leg 1, leg 2, leg 3, you want to see this pull down and get your 5th, right? So this is what you're looking at, or get your 5th wave, because it'll be your 4th, and then you have your 5th wave back up. But this is what you're looking at, because we have the 200% expansion, 73,765, which we hit perfectly. So you completed this 200% expansion perfectly here and perfectly here, and we can get a deeper move to the upside if you get a retracement and restretch the rubber band, right? That's what we need to look at, and that's what we need to focus at, because if we do that move and we complete a third move of a 200% expansion and the new accumulation zone, which is going to break down potentially, looking at this, the 200% expansion takes you up to 109,148, which would be 3 waves of 200% expansion all the way up. And guess what? That's based on Bitcoin finding some momentum, finding new buyers. Is anybody buying here except Michael Saylor at 64, 69K? I don't know. If the markets pull down, I want to see Bitcoin pull down, restretch the rubber band, launch back to the upside. Because if not, then you just have those lower level targets. What was that other target we talked about? 84, 85. This is 83,446. So again, that could just be your move, right? And I don't want to see that move. I don't want to see this move here. This move to me this is too much of a move to be a move that you're going to continue to rise from if you do something like this, right? So if you have this and you have an ABC type pattern, and this comes down to here, wherever this comes down to 64, 65K, then this last leg here, this last leg back up could just be to complete your W at the 83 level. Talked about that, the 84.5 right here, okay? I don't like that pattern. I think you got a lot more upside with a deeper retracement and new buyers, new blood, new money coming in the marketplace. Long explanation, just my opinion. Looking at the MFI, you're in the bearish territory. Momentum is bearish on a daily time frame on Bitcoin, to be expected, but you're grinding and you're spiraling and you're going sideways. Let's look at, let's go ahead and move forward. Look at Solana. Solana, just slow grind to the downside, right? But your key level to watch is 113, 168. Why? Because it's your neckline down here. And if you break your neckline with your massive M pattern, you break your neckline, your next targets are 92 and 66, okay? And you'll see that if Bitcoin obviously comes down and if the markets top and start coming down as well. Bitcoin reverses, you're going to see this start to climb back to the upside, in which case you need to watch 150, and 173, 189, that's back to the upside. You got a base here. You got to start moving up. You got to get some momentum to really start paying attention to those upside numbers. But momentum, by the way, is bearish. So right now, Solana is just on decline, trying to hold support here at the 129 level. If we look at Ethereum, same thing. On a decline, you need to get back on your upside targets. You got to flip 3701. You got to re-challenge and flip 3911. And until that happens, you're just, if you zoom out, this is an 8-hour time frame, put it out on the daily. You zoom out, you have large patterns and smaller patterns, but we've been over this many times. You have this massive 3-wave double top here, right? You have the massive 3-wave double top, in which case breaking this neckline would be absolutely horrible for Ethereum, which is 2770, whatever this is, 2800, somewhere down there. But you have these smaller patterns as well, right? So you have this pattern that's presenting right here. Could we get a pop back up and then a wave back down? This is something you want to watch on Ethereum. You're holding this level relatively well. I don't know why the chart disappeared here with the prices, but you're right around that 3,500 level. So you want to see if you can hold this level. But again, if Bitcoin does roll down further, look for further pressure on the altcoins as well. If we look at the momentum, obviously bearish, okay? Move forward to the DAX. The DAX could have a key 5-wave pattern here coming in as well. Our head and shoulders pattern, nice 5-wave pattern. We'll see how this plays out with the markets. And if it does something like this, this will be a nice 5-wave pattern. We can pull our fib from wave 3 here to 4 and look at this. This would be your 786 right here at 18.8 roughly. So you could see the DAX form its left shoulder, its head, and its right shoulder, right? That's if it fails above the 618 here, 18.6 to 18.8 in this range, often called the golden pocket, right? Right now you're 18,363. If the DAX finds resistance, you want to be bullish on the DAX, you got to take out that high of 19K. So you got to take out that high. You have your W. You got to take out the high, break out to the upside. You're looking at 19.3 and 19,674. We shall see. We shall see how it plays out. If we look at the FTSE, similar, but you're looking at more of a larger three-wave pattern here, right? This is what you're looking at here. So you have this move down. You have a move up almost to the 618 at 83.50. So I want to watch the 83.50 to 84.09. See if you get some price action. See if you get a failure here. Back to the downside. You want to get more bullish on the FTSE? You got to take out that all-time high, 8,489. Let's do one more. Let's look at Tesla. User request or viewer request. So Tesla, I threw on the market maker's Caterpillar here, which is our Bollinger Band. But really, I was talking about this in the Discord. What I like to do with these Bollinger Bands is I don't really care for support and resistance. I know a lot of people use them for that. I look at the contraction, the restriction, constriction, like a python, right? This is the tightest constriction you've had. This is volatility being really, really tight, okay? Like a rubber band, once again, stretching the rubber band back for a launch. It's the tightest constriction you've had in a very long time in Tesla. Why is this important? Because once you have constriction on a daily time frame, you get moves just like this. Constriction, you move spiked up to the upside, but then you dumped. This also works in reverse, okay, where you can spike down and then spike back to the upside. The key thing is a move is coming in Tesla. Very tight constriction. Right now, your resistance levels on a fractal basis is 186.88. You're at 183. The next level to take out above that is 205. If this does something with the markets, if the markets wave up this week to challenge their all-time highs and it pops out and fails, you want to be very well aware with this amount of constriction, there is a move coming in with Tesla. If you take out 167, then I'm looking lower, looking to guard your lows down there at 138. Okay, so you lose 167, watch your 150 psychological level, but really watch that 138.80. Markets rally. If markets take out the all-time high, watch 186. You're almost there right now. And above that, watch 205. Guys, hope you enjoyed the video. Leave me your comments. I answer them as always. Hope to see everybody on the Discord. Have a fantastic week, everybody. Try not to melt out there.